Welcome everyone. Wednesday, 10th of November. Melbourne Cup is over. It's done. We are heading into Christmas. Very, very excited to bring home this year. There's about 45 odd days of real work left, before we all sort of get into the silly season. I know it's started because on the weekend with my youngest daughter it didn't matter which shop we went into, she managed to find Christmas decorations of some kind. So the house has already got, little Santas and Rudolphs lit up at night, which is good. She's excited. And I think it's nice to know that particularly here in Melbourne and those of you coming to us live from Sydney as well, that we're going to have pretty much a normal Christmas now that we know that Corona hopefully is a thing of the past and vaccination rates are bringing us through to the promised land. So very, very excited with all of that. Welcome for those of you that have just dropped in. I'm looking forward to today's session. It's going to be a fast one. There's a lot of stuff to go through. Chatting with the guys in the green room just before we went live. I know there's a ton of questions they've received over the week from people that have said they're not going to be able to join us live, but would like to have us answer some of those questions. So we'll try and get through all of those. We'll try and get through everything live. For those of you that are joining us from Facebook, we won't be able to answer your questions live, but join us on Zoom or put the any questions in the comments and we'll try and get back to you. So let's get stuck into it. I'm just going to get my slides up. All right, so those of you that haven't been here before, or perhaps those of you that have and have forgotten this, I want to ask you a question just to set the tone. I want to know from all of you, what is more important? Is it information or knowledge? So just take a moment, think about that. Information or knowledge? What's more important, do you think? All right, you've got your finger on an answer. Tell the person next to you, whatever it is, keep yourself honest. The answer is information. No, just kidding. It's knowledge. All right. So why do I say that and why is that important? Well, today's session is all about this very concept between information and knowledge. We call it question time, which is for you to ask us any questions and for us to try and answer them for you. And what that is it's taking that information, which is organized data about something, understanding it and turning that into knowledge, right? And we do that through our experience and education. And so it's a really, really key concept because today information is everywhere. You rewind the tape 20, 30, 40, 50 years ago, there was very limited information out there. So if you had information, you typically had an advantage over everyone. But in this day and age, with social media, the internet, Google, newspapers, 1,000 TV channels out there, information is dime a dozen. It's everywhere. And the problem has now become crappy information, fake news type information versus real information. So you actually now having that information can actually be a disadvantage unless you actually are able to turn that into knowledge and get that understanding from it. So to be able to work out what is important, what you should be listening to, what isn't important, and then be able to apply that to your personal circumstances so that you can go out there and take those actions that you need to do. So really, really important concept. So remember, knowledge, knowledge, knowledge. Just like the golden rule of location, 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 you need to have knowledge if you want to be successful out there and you want to capitalize on the opportunities that may or may not appear. So that is the theme of today's session. That's what it's all about. So keep that in mind as we're going through and really think about that concept and, try and hit us as hard as you can with the questions because I know the guys love being challenged. That's why we do this. So now before we get started, I want to just take you back about 20 plus years ago. I'd just been out, had a big night celebrating with friends. I just moved into a new place. I was really excited. Things were going relatively well, I thought. Nice place, had my own room, had got a few new things. And back in those days, you didn't have things like direct debits. You used to give your flatmates cash for the rent. And one of them used to go to the local real estate agent and hand over the cash once a month or even write a check and bank that cash. So we got the early in the morning, on the door. I was not feeling great. Obviously, as I said, had a big night out the night before. And who was it? It was the landlord basically saying, here you go, here's an eviction notice, you guys are out. And I was thinking, what the hell is this? Well, what do you mean? I've just paid my rent. Everyone's been paying for the last months. We've been giving it all to Jack. What's going on? Unbeknownst to us, a good friend, no longer a friend anymore, Jack had taken the money and he had been spending it for the last 3 months. So the rent wasn't paid. And yet again, I was homeless. Now, I know that is an all too common story. I'm sure many of you out there that are first home buyers can relate to that. And the reason that I tell you this is that, whilst now, I've got my own home, I have great family memories like this in the home. I've got multiple properties, I've got investment properties, I've got a big portfolio. So I've got a really, really solid understanding, and I've done really, really well out of owning homes and creating homes for tenants. It wasn't always like that. I understand what it's like to be in the struggle, to be sitting there, to be found to be homeless versus having the security of having your own home, both financially and just emotionally, having a place that you can call your own and what it does for you. So, I understand that, but I've also been able to go through it and come out on the other side a far, far more successful, stable, and happy person through taking on board the tips that we're going to discuss with you today. So what do I bring to the table? Well, I bring not only that experience and that understanding through there, I also bring through my training as a chartered accountant. Whilst I don't practice as an accountant, I do have a very, very good, solid understanding of the numbers. So, as we talk about, owning a home is both an emotional thing that you do, and it's also a financial thing. So I'm able to break those two apart and understand what makes sense and really how to drive those numbers. And particularly for those of you that are investors on the line today. So with that in mind, just before you're about to tune out because you think that this isn't relevant to you, what we're doing here today, it doesn't matter where you are on that journey. So whether you're like me 20 plus years ago and you're just renting a place, or you're like me today and you've got multiple investment properties or somewhere in between there, today will have value for you because we're going to talk about concepts that are relevant for everyone. We're also going to talk about, tips that you can take home, you can put in place today, wherever you are on that journey. So don't tune out. I guarantee if you stick with us, you'll get value out of it today, no matter where you are. So what are we going to go through this afternoon? Well, I'm going to break it down into 3 key sections. So the first one is, surprise, surprise, the information section. I'm going to go for about 5 or so minutes. I'm going to throw you a ton of information. I'm going to set the scene on some key topics and themes that I've seen happening during the week. And that will really get you thinking. Jump in the Q&A now if you've already got questions. As I'm going through it, jump in the Q&A and get to the front of the queue. Then, of course, the main section, section 2, the knowledge portion of today, which is what we're all about. We'll go for 20 to 25 minutes, depending on how many issues we've got going around and whether I feel we need to extend it a little bit. So, feel free to jump in and get your questions going now. That's obviously where we're going to try and really deliver the value to you. And then lastly, I want to just outline a few next steps. So, what should you be doing if you followed through the information, you've gone through the knowledge, perhaps you've joined us multiple times, what should you be doing to move forward to be able to take on board what we've discussed today, set yourself up so that you actually can continue to use this system and process out there and to really jump on those opportunities as and when they come available for you. So all up, that's about 30 minutes there. I should have you back at your desk if you're at work or at the school for the local pickup or whatever it is you're doing by just after 3 o'clock. So probably by 10 past 3, you should be well and truly done and out of here. So of course, if you're not able to hang around for all that time, I will send you a copy of the recording after today's session. But obviously, focus is what's important here. Turn your phone off, put it on silent, whatever it is, and really focus, because that's how you're going to get the value out of asking all of those questions. All right, no questions yet. Section 1, information. It's going to be fast. It's going to be quick. Take the notes, jump in, put your questions in, whatever it is. I'm going to run through it, but don't worry if you don't catch everything, because we will go through these in more detail when we get to section 2. All right, so what have I seen happening around the countryside this week? First up, Australia's dwelling values. We got the latest CoreLogic stats. What do they mean? What should you be doing? We'll run through that in detail. Interest rates, very, very topical at the moment. Let's run through some more detail in that. Risk, something that we often do talk about or don't talk about. I really want to drill into that. Rental vacancy, as I said, for those of you that are investors on the line, it's been tough. What are we starting to see there? And then lastly, as I said, first home buyers. Surprisingly, even with high prices, they are buying in record numbers. Why? And what should you be doing if you're still a first home buyer and haven't transacted yet? So they're the key themes that I've seen happening in the last 7 days. And that's what I really want to focus on. But feel free to drop in any questions that you might have. Okay, auction statistics, just to set the scene. What have we seen last weekend? Another really, really strong result with 76% national clearance rate across the board. Again, really, really strong numbers for both Melbourne and Sydney. You can see they both had what we call a Super Saturday. So 1,200 auctions in Sydney and just under 1,400 auctions in Melbourne. So for Melbourne, down from the 1,700 we had last weekend, but again, a massive weekend there, and Sydney really starting to catch up in numbers as well. And both those we're still seeing clearance rates above 70%. So those of you that are thinking perhaps things are slowing down, you are mistaken. The numbers are getting bigger and bigger every week, but those clearance rates are still staying really, really strong. And obviously across the board, you can see we've done really, really well, albeit for those of you that follow us for a long time will know, and it's pretty clear from this graph that outside of Sydney and Melbourne, the other markets have very few auctions. So to some degree, these figures don't help that much beyond the two key capital cities, but it is still good just to get a gauge what's going on in those markets. Now we are in November. So realestate.com, they don't exactly tell you when they publish these results, but once a month, they put out the volume of transactions that they've seen. So those of you that have been here in the last few weeks, we had up to week 40. We've now got up to week 44, which was 7,755 properties or homes transacted in that week alone. So that is just in 1 week, almost 8,000 properties. Now, why is this important? The reason why I show you this is that just as we said when we're looking back at the auction results, and I said, really it's only a Sydney and Melbourne story in terms of the volume, you've also got to think about when we're talking about prices increasing, you're talking about clearance rates, what are we seeing in terms of the volume of transactions? Because if you're not seeing a lot of volume, then perhaps it's not a good indication of the real market value or what's really happening. So you can see here, the red line is 2021, the blue line was 2020, and the grey or black line is 2019. So the last 3 years here, you can see every single month, every single week. This year, we've been doing a ton more transactions than, surprise, surprise, 2020 and obviously 2019. Now, for those of you that are here in Melbourne, you might say, oh yeah, but 2020 was a crappy year. We were locked up for just as long. That may be true, but remember, this is nationally. If we go through into state by state, as I said, surprise, surprise, Victoria itself is 62% up in terms of the volume of transactions. New South Wales, 37%. So those of you that are thinking, yeah, but 2020 was a funny year. Well, New South Wales, coronavirus was basically a nothing in 2020. Obviously, 2021, they've been locked down for almost as much as Melbourne has. And still, they're almost 40% up in terms of the volume. Nationally, you're seeing it 45% up on the volume. So it's obviously a really, really strong indication that the numbers are coming through. So what we're seeing in prices, clearance rates, demand levels are double basically what we saw last year, and really shows you that the strength of today's market is not just a small number of transactions occurring. It is a ton of activity that's happening. So we really can rely a lot more on these stats that we're seeing, as opposed to when the market is a lot thinner in terms of the number of transactions that are happening. Okay, that is it in terms of the information section of today. As I said, it would be fast. I really just wanted to whet your appetite because this is obviously open to you for your questions. And I just set a bit of a framework for what's going on. So those of you that have just joined or I haven't met you before, my name is James Maitland. I'm hosting today's session. I've been doing this for more than 20 years, and I've helped create more than 11,500 homes for people just like you on the phone today. Salvo, what do we do if you're not part of our business already? I'd love to have you as part of the business, but really simply, we help create homes. So we've got a ton of different businesses, and it really depends where you are in that journey and where you're looking for some assistance. But if you're at all wanting to own a home, whether it be your own home or an investment property, or looking just to start getting involved, we can help you in the various businesses we've got, because that's our key goal across every theme that we do. And like I said at the start, it doesn't matter where you are in that journey. There's value for you in today's session, just as there is value in what we can help you do here at Salva. Who have we got on the panel answering all of your questions today? Greg Arbeck, Jack Jan, and Lucas Karras. These boys have been doing it for decades and decades themselves. They've probably done even more than me, but the good thing about being the host, I can put my numbers up and not their numbers. So I don't want to embarrass myself by not looking like I've got the highest numbers. But between us, we've been doing this for more than a century. We've got a wealth of knowledge, as I said, and we're really looking forward to imparting as much of that as we can with you today. So like I always say, focus, get the most out of today by being involved, participating, being active, getting your questions in there. How do you do it if you haven't done this before? It's really, really simple. There's two ways. The first way is jump in the Q&A. It's tried and tested. It's easy, and I can already see on my screen, we've got a ton of questions that have already come through. So thank you for everyone that's got involved. We're going to go through those in a moment. The second way, if you're feeling brave, you can join us live here on the virtual stage and get involved. But don't be afraid. We will not bite. And if you don't want to and you just want to do the Q&A, then that's obviously fine with us. However you ask your questions, we will make sure we get to all of them. Okay, let's get stuck into it. This is where I really, really want your focus. This is where we're going to go through all your questions. I want to really just get through them as quick as we can so that we can make sure we get everything done. So first thing off the top of the ranks was, I was just seeing on my screen, I've got a little thing here, my crypto. I'm about to become a multi-millionaire and you won't be seeing me again. Just kidding. I do not invest in crypto. I don't believe it. But that does bring me to our first topic, which is about risk. Can someone out there sort of give a bit of an overview as to how risk is relevant when it comes to investing in a home, and what perhaps we should be looking for?
Yeah, James. Let's face it. Everybody wants a dream of investing, so they can have a secure and enjoyable retirement. Financial freedom is what we're all seeking. So there's people that sit around the barbecue listening to stories. There's always a classic one of your taxi driver, like yourself, telling you how to invest in Bitcoin. It's the next big thing that'll make you a millionaire overnight. But you also have people that, like the people that join us here, that get the right advice and education about the proven, most secure way to achieve that retirement dream. And it's no other than investing in property.
So, perhaps can you, for everyone on the line today, give some examples, because risk is it's a four-letter word, and often, people just ignore it. But it's not. It's a lot more complicated than that. I guess it spreads across things like your appetite for particular returns. How much spare time you've got involved. Where things are located, and it's quite a big topic. Have you perhaps got some examples for people out there that might help get them thinking about this in terms of, what risks might be relevant for them that are not relevant for others and so forth? Perhaps can you share a few with the group?
Of course, James. Look, there are those that like to buy in an established, well-known area like Melbourne or Sydney CBD. But there's people that are happy to invest in less popular areas with the potential of, high growth, but risk not having a tenant, not having an immediate income. There's people that do renovations for their house, thinking, the next 5 to 10 years, it will take a couple of years to the renovations, and then after 5 to 10 years, the house will be worth a lot more money. So, but we got to be careful, and you got to look at what happens if you invested everything you got in a property, and you're counting on that important rental income to meet your loan repayments week after week, but you invested in a property that nobody likes or in an area that nobody wants to live in.
Yeah. Okay. And I guess, I know it's probably a funny thing to say to people at the moment with interest rates so low. But, I think I've told this story many times to people before. I remember back in 2007, just my home loan and the one investment property that I had, I was paying more than $12,000 in payments in a month. And I tell you what, they were not multi-million-dollar mansions. They were cheap little tiny apartments. But when interest rates were high, that rental income was critical, because I tell you what, my salary wasn't that high. So I was relying on that rental income to come through. So that's where I think, Lucas, that's probably where you're saying it might look like a good idea to go in these new growth areas, perhaps, out more mining towns and so forth, with a promise of double or tripling your capital value, overnight, if you listen to the taxi drivers. But if you're not getting that rental income, you probably can't service the mortgage, which means you can't stay in the property invested for long enough to have this capital growth explode, if it ever does, of course.
Well, that's it, James. And, there's certain things like, somebody who's in the late 50s and they're looking to invest. There's no point for them trying to invest in an area that maybe the next 10 to 20 years it will take off and it will become popular. They don't have the luxury of time. Then, you've got other people that the job might be under threat, or they have a short-term contract. Like you said, some people might have a low level of savings and no buffer in case something happens and they get in trouble. So, and I've always told people, I've been doing this for nearly 20 years, and I've always told people that you got to move away from the emotional decisions when you purchase an investment. When you purchase an investment, think with your head, not your heart.
That's why I'm a chartered accountant, all about the numbers.
Exactly.
All right. I've seen a question here from Mike, just asking about, I mentioned at the start, the CoreLogic stats. What are they? What have we seen? Can someone run through high level? What have we seen in terms of monthly, year-to-date returns?
Okay, James. The CoreLogic just released a number for the October. So the Australian property value has increased 1.5% in October. So the monthly growth looks like it's slowly slower than the August and the September. But let's have a look at the figure 1.5%, which is individually looking, that is still a very good number. And also we look at the big picture of the national, the year to the October, last 12 months, the national home value are up 21.6%, which is really, really good. And of course, the Sydney is still leading the path, and the growth in 25%. And Melbourne also doing very well, and the increase 16% annually.
Okay. So anyone out there that's worried, they are massive numbers. Obviously, Sydney is just going wild, but Melbourne, given how much it's been locked down, like 16% in only 10 months is a fantastic result. And I don't think anyone can be unhappy with that. But I guess with such big numbers, what are we seeing in terms of the forecast, for the rest of the year and perhaps into 2022? Are we going up, down, staying flat? What's sort of the general consensus out there?
For sure, the property market will still continue to rise, but probably with a little bit slower pace. Let's have a look at the data. We had a look at the clearance rate, the days on the market, and also the discounting rates from the vendor, which all showing those data is well above the average. So this is still indicating the market now it's a seller's market, and also will keep going well. And also we're still seeing the lots of the demand, either from the investor or from the first home buyer, and the relatively lower level of the stock. So the prediction is in the rest of the year, probably the early next year, or maybe through the whole year next year, the market will still keep going up.
Okay. So when we see headlines about growth going down and so forth, to be clear for everyone on the line, the consensus from everyone is that prices are going to keep going up, but perhaps what everyone's referring to is that, the record monthly growth that we were getting at the start of this year has slowed down, but it's still a positive number. Albeit I do think in those stats, Jack, am I right? Perth for the month, it did actually go down a little bit. But aside from that, everyone's still going up. It's just not as quickly as perhaps we were at the start of the year.
Yes, the peak time was, I think it's March this year. The monthly growth is 2.8%, which is unbelievable. But if we compare with that peak time, we're saying, okay, the 1.5, 1.6 is not good as the peak time, but we have a look at the average and also look at the major capital city. We all have a positive monthly growth, which is still the very good results.
All right, good. Now, before I let you go on this, I've seen a few other questions coming in from people, but I think you've covered most of them. What's one of the key takeaways, or what's something that that you think people should be looking out for in the next few months and into next year? What's something that you think people haven't looked at enough, or you want to really highlight for everyone before we move on from this topic?
I think it's that people were looking not for the next year. As we say, the next year, the property market will still keep going up. I mean, some person may asking for the long term, what we should, to maybe a little bit careful, we will be noticed. It's just being like looking for the long term, maybe because the prices keep going up, the affordability will be getting worse. Plus, we might have the more stock, the supply level will be higher. Plus, after 2024, we're saying the interest rates might be going up. So this could be the factor to could a little bit for the market. But the certain thing is it was still going up, the market. And also, and we're seeing the lots of people, they asking about the house and the apartment, the unit. Since the gap between the apartment, between the unit and the house now is getting bigger and bigger. For example, the Sydney, the house value are up 30.4%. The unit, the value is only up 13.6%, which makes the house is less affordable. So I think in the next year or in the next couple of years, all the demand will be towards to the unit from the house. So the unit price seems to be going up very quickly.
Okay, good. Tony, I think that might have answered your question already. If not, drop something in the comments. All right. Jack mentioned interest rates there. And I did see at the start when I was just doing the intro, I can't remember who it is, so sorry if I don't shout out to you. I did see a question there just about interest rates and these predictions in terms of where they're going. And I guess the consensus is everyone knows that the interest rates at some point will have to go up. When exactly, I guess, is the big question mark. What, the Reserve Bank governor has pinned himself to 2024 all year. And despite perhaps, not being as definitive in the last couple of weeks, he's still very much talking about 2024 before we'll see any rate rises. What's the consensus of the market out there in terms of interest rates? When are they going to go up?
Well, in terms of the consensus, James, most of the banks are saying they anticipate interest rates going up late next year. So Reserve Bank is still saying 2024.1%. But if you look at all the major banks, they're projecting, they can see that sort of heading towards between 1.5 and 2% starting late next year. That seems to be where people are pricing things at the moment.
Okay.
Yeah.
So Jenny just asked a question about where or how high are they going to go?
Yep.
And I think maybe you answered that. But just before, if you confirm if that's the case, I just want to know when was what was at the, we're at record lows. What was our previous high and when was it in terms of the...
Well, firstly, everybody's saying it'll never reach that. So that's important. So don't panic and don't have to take Valium straight away. So in 2008, we were at levels of about 7.25%. So, that is, relatively high compared to what they're predicting, about 2%. So the predictions are it will never get to that. And that's got a lot of factors like global interest rates are low. There's a lot of factors that they're saying that it will stay around the 1.5 to 2%. It's not we won't see those crazy interest rates for a long time.
Okay.
Yeah.
So my story about, when I was paying 12 or 13 grand a month in interest back in 2007,
Yeah.
no one's going to be able to beat that story, are they? Because we're not going to see those record highs
That's what they're all
Again,
projecting.
albeit
Yeah.
that's my version of obviously what I have to listen to from my dad telling me in the 80s when he was paying 13% interest and 15%. So, you know, I guess interest rates are really, really important because they're, you know, the number one, well, you know, if they're not the number one, they're the number one or two most important factors in terms of prices and so forth, because they drive people's affordability to you know, be able to get a home loan, the size of the home loan, and obviously what they can service. But what are some of the effects that you think we're going to see on the market and or individuals over the next couple of years then, Greg? You know, if interest rates are going up, what can we expect to happen?
Well, what it will do, it'll start bringing, firstly, it will bring things back to pre-pandemic levels. So right now, you've got these very ultra low, historically low interest rates. So people's monthly repayments have reduced. This will probably bring it back to, on an average of about 7,500 per year above what they're currently paying. So that's assuming about 2% interest rates. But that, you know, when you look at that put it into perspective, it will bring things back in line with what we were seeing pre-pandemic levels.
Okay.
Yeah.
So I've just brought back up this graph as well, just to help Greg in his answer. Anyone that's concerned about, you know, any hysteria, oh my God, you know, the market's going to crash. Well, the market's been supposed to crash for as long as I've been alive and even before I've been alive. So don't listen to the doomsdayers. They always predict it. They always get it. And I think what was important, as Greg said, you know, where interest rates are going back up, right? There's no denying that. They're not going to stay at the level that they are forever. But we're talking about going back to where we were pre-pandemic, not back to 2007, 2008, the last high that we saw. And the reason I brought this graph up again is just remember, yes, we're seeing an elevated level of transactions here with the red line, but the black line was 2019, which was still a really strong year. That was with those interest rates there. We had growth generally across the board, across Australia in terms of house prices. So anyone that's concerned, that's sort of where we're going back. Sure, as Jack said, we're not going to be getting the massive growth that we've been getting the last 12 or so months, but don't expect house prices to halve or whatever.
Yeah.
They might flatline. They're definitely going to slow down their growth, but definitely we're not going to see all of a sudden things go crazy. And for most people, you can probably afford the rises because I guess, Greg, everyone's getting assessed on the buffer rate anyway,
already,
which is adding 3%. So based on what you're saying, it's not really going to make a big difference
it's not
to people that are currently owning a home. Maybe for those buying it, it's going to be, you know, they can't borrow as much, but.
And I think what everybody says, the doomsday says that the property's going to fall out. It's never going to do that. As you can hear, I'm a foreigner. I've been here a while, but I still speak funny. And it's over that time frame, we'll see some rectification. We'll see some, you know, reductions, but ultimately the property graph in this country is going up. That's what it does.
Okay.
Yeah.
All right. Good question here from Patty. She's a property investor and she's just asked about inner city vacancy rates and how long she's had her property vacant for. We are seeing some green shoots out there. I think we must have got October's vacancy stats. Can someone give us a quick snapshot? I guess let's focus in. I think Patty said she had a property in Sydney CBD. So maybe can we focus Melbourne, inner city and Sydney? What have we seen in terms of vacancy?
Well, there's good news there, James. Again, I'm just looking at the figures here. It's reduced. Melbourne's gone from 3.5 to 3.1. So we're still sitting at 3%, but it's still the reduction. The market is getting better. You know, we're actually and the same with Sydney from it's gone down from 2.5% last month to 2.2%. So the vacancies are steadily coming down, which is a very good sign.
Okay.
Yeah.
And why are we sort of seeing that? I mean, obviously the key thing, both, states are out of lockdown, albeit they were kind of in lockdown for most of October anyway. Yeah. Why are we starting to see this positivity and things get better?
I think it's got to do with more certainty. We know, even though they're saying we're just dealing with Rona, as you call it, it is here and it's here to stay and we're going to deal with it. So people can actually make a decision, go, okay, am I going to commute? Am I going to stay in the city? A lot of people are taking the view that they got more certainty, so therefore they are taking the leap of moving back towards the inner city, which steadily will increase that. And once our borders open, that'll put more pressure on it. So we'll see a steady increase of rentals back to the levels we had pre-pandemic.
Right. And most importantly, for everyone that's a fan of Greg's band, Day of Storms, live gigs are back, Greg. So at some point, once the band is back together, you'll be performing again, which, as you said, that's what brings people back to the inner city.
Correct.
Not only to work in those kind of event spaces, but also to come and enjoy everything that's great about living in the inner city.
Yeah,
so that's slowly starting to turn the tide, I guess, that you said, we're no longer just, maybe Corona's here, maybe it's not. We've accepted it's here to stay.
Yeah, that's it.
We've gone down the vaccination. So people are saying, right, I've got some certainty moving forward as to where things will be.
If you're going to a heavy metal gig, put your eye makeup on, get your people with all the skulls and stuff, and get out there and do some headbanging. So.
Now, this is not a view supported by anyone else. So, Greg, what are we? What's sort of the forecast? Like, are we expecting that next year we're going to be down to record low vacancy rates, or is this going to be a slow burn?
I believe it'll be a slow burn, and it's something that we'll be giving our own owners as well. If you've got a good tenant, keep them, lock them in, and slowly but surely increase the rent. And just the reverse, if you are a tenant looking for a property, lock in a long term. Don't look at jumping around all the time now. Focus on what you want, lock it in, because the rentals are going to go up.
Okay. All right. Good. Yeah. All right. Now, lastly, just before we wrap up, I've seen a few questions about first home buyers and how hard it is. I don't want to touch on that too much, but really interesting stats that we've seen is that, first home buyers, in the face of, the massive price growth that we've seen and question marks around the affordability, have been out in massive numbers. They've been buying more than they have ever in the last decade, in this last sort of 6-12 month period. Well, why have we seen such record numbers? What is it that's causing that?
Yes, James. We all know from the last year, the government, we have lots of the stimulus and the incentive, such as the home builder program and the stamp duty concession. I think those incentive stimulate is brought forward a lot of the demand for those who are going to buy their first home in the next couple of years, maybe make them purchase sooner.
Okay.
And I think it's also another thing is the bank mom and the dad, like we talking about before, is being very active on the market to help the children to get into the market, because they keep rising the price and the formal. So that's pretty much another big reason to push the first home buyer, the purchase at record high.
All right. And so I guess you're saying it's sort of, we've brought that demand forward for first home buyers. And what are we sort of saying, that the government incentives helped offset the increase in the prices that perhaps, investors and second home buyers and upgraders and so forth were paying? Those incentives help cushion or soften or potentially even put these first home buyers in a better position. But now that they're gone, I guess we're not expecting to see quite the same volume of first home buyers. Would that be a fair assumption?
Yes, some of the incentive has expired, as we know, and also we will start seeing the first home buyer, the numbers is to drop a little bit. But I think the good things is, if you are first home buyer, you're not being encouraged by the government incentive and the stimulate and getting into the market already, you're already success.
Okay. And so, we've seen investors have started to come back. Greg's just touched on that, there is light at the end of the tunnel. Vacancy rates are getting lower. And whilst he said it might be a slow burn, that it's definitely going to be getting better and better. And I guess we know that typically investors compete with a lot of the first home buyers, particularly for second-hand stock, I guess, because it's that cheaper price point. So is there any sort of good news for first home buyers? If prices are still going to keep going up, like you told us at the start of today's session, Most of the incentives are wound back. You're now competing with investors. Is there anything good news for our first home buyers on the line?
I think, as I said, the good news is if you're a first home buyer, you'll be able to get in your deposit, or maybe you'll be able to get a help from your parents and be able to get into the market today, which means the property you have will be ever affordable than any time later on. So I think that's the good news. If you, the first home buyer, you'll be able to have your deposit ready, go to buy it today.
All right, good. I'm going to leave it there because we've gone over time a little bit, and I did promise I'd try and get you out around 3:10, which it is now. So I just want to wrap up with a few comments. If we haven't got to your questions, don't stress. We will go through the transcript and get back to everyone via email or whatever contact details we've got for you. And also for those of you on Facebook, we'll go through the comments and answer those for you as well. So thanks, guys. That was a great session there. Before everyone goes, as I said, I want to just run through what are the next steps. You know, as I said, we've got about 45 real days left of 2021. You know, before we know it, 2022 is going to be on it, and 2023 will only just be around the corner. So, you know, that's not too far to look out. But what I want to ask you, and I want you to ask yourself, is what are your plans for the next 18 months, the next 24 months? What are you doing, and are you prepared, and have you set yourself up to make sure that you can achieve what you want to do over that period? Now, what I think most people are going to do is say, yep, that was great, love it, fantastic. You know what? I really should do it. But what are you going to do? You're going to do nothing, right? Why do I say that? Well, I'd love to say that it was different, but I just know through past experience. Most of you on today's call, what you're probably going to do is say, yeah, I should do that. I'm going to do that. I'm going to do this. I'm gonna. And what do? You all do nothing. Now, for some of you that are successful and you just came today just to enjoy it, great. But those of you that are wanting to make changes, you're wanting to smash through the next couple of years, just think about this. If you don't make a change, don't expect to get a different result. So you need to make those changes if you want to actually get a different result and move forward. So what I ask you to do as a bare minimum today, so I want you to just think about what we've talked about. Think about the information versus knowledge, all the tips, all the discussions that we've had. And I want you to take on board that, the systems that we've discussed, and go out there and do it yourself. So make those changes, take on board that information, create that understanding and get that knowledge, and go out there and do whatever it is that you need to do so that you can make sure that you have a fantastic next year and the year after. For those of you that aren't prepared to do that, or you're saying, yeah, but I don't know. Well, what I'd love for all of you to do is think about the different path and do it with us. Now, what I mean by this, how are we going to help you? I don't know. As I said, we've got a ton of different businesses all about helping you create that. So, you know, the reason why I say this is that the people that are successful is they're able to identify their strengths and weaknesses and see where they can get help and get to those goals faster. So, you know, if you want to buy your first home in 2023, why not do it in 2022? But you're going to need help. You're going to need some guidance from people that are experienced and do that. That's why I would love to be able to work with you so that someone from my team or myself can really, really work with you and help you achieve that, or whatever it is that you want to do over the next couple of years. So unfortunately, it's not going to be for everyone, right? And that's just the way it is. Not everyone is going to be the right fit for us. So if you are on today's call and you've got value out of it, then it probably is the right fit for you. You know, you need to be prepared to do the work, roll up your sleeves, take the action, understand the concepts we've spoken about not all information is useful, turning it into knowledge so that you can identify the steps. And lastly, you know, you've got to actually be prepared to take the action and put it into place. So there's no point in having the theory, thinking about it, and not actually jumping in. When those opportunities present themselves, you've got to be prepared to take that action. So if that sounds like you, then what I'd love to be able to do with you is I've thought long and hard, as I said, when you say, well, how are you going to help me? And I've said, well, I don't know. Why? Because the best way that I see that we can move forward for the minimal amount of commitment from you, and that I can still guarantee you'll get value out of it, is for us to have a one-on-one catch up sometime over the next week. We can do this face-to-face if you're here in Melbourne. We can do it over the phone. We can do it over Zoom. We can do it over WhatsApp, FaceTime, whatever you prefer. And it's really, really simple. We're talking about 15 to 20 minutes out of your day just to have a quick discussion like we've had today, answer any questions that you've got about the local market, just get a better understanding where you are, what are the friction points you've had, what are you hoping to achieve, and then really think about how we might be able to help you and make sure that you're a good fit for us. And what I guarantee you is that by having this session, we will give you a few key things that you can take home and you can implement right then and there that will make a change. So even if you don't want to continue on the journey with us, that's fine. But you'll be able to walk away from this with some practical steps that you can take to be able to go out there and do it yourself. Because ultimately, we just want to help people create a home. Whether we do it full service with you, we just give you some guidance or advice, or whatever we do along that way, that's what we're all about. And that's what we'd love to see people do. And that's how we want to help you. So if that sounds like you, then jump on, book one of these sessions. How do you do it? There's a link in the chat. You should have been redirected if you're on Zoom to the web browser booking page. Or lastly, if you're not sure yet or you don't see it in any of these options, at the end of today's session, I will send everyone on Zoom a follow-up via email. If you're on Facebook, I think the link is somewhere on our homepage. If not, just send us a DM or whatever, and we will send you one of these booking links so that you can jump on. Now, before I let you all go, it's coming up to holiday time again, but this is going back about 6 months ago at the school holidays in July. I went on a family holiday to Hamilton Island, fantastic place of the world, great to get away. Whilst it was cold and dreary here in Melbourne, it was fantastic to get away to somewhere warm. Now, the reason why I'm telling you this story is this photo did not come without its own challenges. When we were there, my eldest daughter, Isabella, she said to me, "Dad, I'd love to walk to the top of that mountain and watch the sunrise." So I said, "Yep, great, let's do it. We'll do it tomorrow morning." That night, I obviously went to have a look. What time does the sun rise? Set my alarm. To my surprise, 4:45 a.m. What's one of the joys of having a holiday is being able to sleep in, not having to get up, not having a timetable. And I was about to say to her, "Isabella, you know what? I don't really want to get up that early." But I thought, no, she's excited. Let's do it. So I set my alarm and rolled over and went to sleep. What felt like no more than 5 minutes later, I heard that annoying that very, very annoying iPhone alarm that goes on and on and on. So what did I do? Like most of you, I hit the snooze button, rolled over. 8 or so minutes later, it went off again. Picked it up. I said, "I'm not getting up." She hasn't even moved. And I hit stop and I rolled over. Now, that was easy. That took no effort. But about 30 seconds to a minute later, I thought, what am I doing? She was excited. We're going to have good fun. I jumped up. I woke her up. We got dressed. We ran to the top of the mountain. We got there just in time. We took this fantastic shot. You can see the excitement in her eyes. And it's a great memory that I'm always going to remember. I know she loved it and we had a great time. Now, the reason why I'm telling you this is that you've got to be prepared to take action, because it's those people that are prepared to wake up early, that are prepared to take those steps, to do things when it seemed like it was easier not to do them, that are actually going to create these memories. As I said, this is a fantastic photo and I'm glad that I got it because it was a great memory and I'm always going to remember it, and I know my daughter will as well. But it was so easy for me not to have achieved this. So just like you, it'd be so easy for you to switch off, say, yeah, I'm going to do it later. No, I can do it myself. But I want you to just think about it, because you've got to be prepared to take those steps, take the action if you want to get those results. So just remember, I'm asking you for 15 to 20 minutes of your time. That's the smallest possible commitment you can make, whilst I'll still give you a guarantee that you'll be able to get some value out of it. So if you are on the fence, jump on now, book one of those sessions so that you too will get a memory just like me. You'll have something, you'll be able to move forward, because you've got to be prepared to take those steps if you do want to get those results. So that is it. I know we've gone a bit over time, so thank you very much for all of you sticking around. We will be here every Wednesday, so if you would like to join us again, we'd love to have you. Join us next Wednesday, next month, whenever it is, come and join us anytime. And that is it. So from me and everyone, thank you very much for your time, and I look forward to seeing you again very soon.